The Australia US dollar, this was a recommended trade this week, but it just simply could not pan out. The commodity currencies getting hit very hard as the metals, the oils, equities, everything moving lower had an extremely negative effect on the Aussie dollar. Now, the only thing I do want to point out here, again, much like the Canadian dollar, guys, my opinion is we're simply range trading on this Aussie dollar. Any move down towards this 81, we've got our triple EMA crossover that's trying to make a move, but it's really struggling to make a confirmed sell signal on this. My opinion is the Aussie dollar is a high yielding currency and we continue to buy it. So if we can get a break down into this 82 level, inside the same basic range we can see that's been going on for some time now, and to uncomplicate it, that range is basically in between 94 and about 81.50, so that really sums it up. So any move into this lower level is actually a pretty decent buying opportunity. And again, there's nothing wrong with holding the Australia US trades for a couple of days or a couple of weeks or even a couple of months, because essentially this is a carry trade and it can be very, very beneficial holding those smaller positions over a longer period of time. But again, to begin the week, we're likely to see a little bit more downside, and then we should start seeing a good move back towards at least the 86, 87 area. Now we've looked at the yen. What else have we got here today? We've got the U.S. Swiss franc. We're definitely getting into oversold territory here. Again, the U.S. Swiss franc, the Swiss franc itself making up about 3.6% of the index. Not a big player in that dollar index, but again, this thing has been moving steadily down. This is a very nice signal from vantage point, this sell signal off the 114 area. We're now sitting down at the we've closed the week at 106.32. So this was a recommended trade several weeks ago, but looking, if we catch this just as it moved from that time, when we got the break on the triple, illustrating how important the triple EMA crossover actually is. A single trade on this, this is it's kind of a useful tool to use this profit calculator, because the single trade is essentially 955 pips. One contract produces about $7,640. It's a very, very nice move, and again, if we're using that based around the analysis of the U.S. dollar index and everything else, it's a great trade. Now, again, we're getting into the thing I want to point out to everybody here, though. Again, we're getting very important to be mindful of these ranges. When we initially got the buy signal on the U.S. Swiss franc, it was right around this 105.50 area. So my opinion is we could actually see some buyers coming in here. So I hate to put out these counter trend positions, but the reality is we've got a couple of warning signs from vantage point. The predicted MACD and the predicted true strength and the predicted medium and long-term differences are all heavily oversold. So we've got our predicted 18-day moving average from vantage point sitting all the way back at 110.16. That's a huge gap, guys, in my opinion. So that gap needs to be filled a bit. And again, that coincides with that true strength indicator crossover on the US dollar index, that we're going to let this thing move higher and then use it to reset the shorts once we get a move back up towards I would say between 108.24 and 110. That's how I would like to play this, because again, we're into heavily oversold territory. U.S. Swiss franc starting to come under pressure. Euro US starting to gain some strength. So we'll see how this plays out, but my opinion is we're probably going to see this rally stall a bit in the 105.50 area. Now, going into our next pair here, the New Zealand US, I'm not going to spend a lot of time on this one because it's very similar to what's happening with Australia US. Vantage Point is struggling to put out a sell signal, but again, we're playing a range. The range is identifiable here between 66 and 73. That's our current range. We're not oversold, though, to be perfectly honest. So the New Zealand US may have some room to extend, but again, my bias, the New Zealand US dollar is not affected by the US dollar index, but it's still we've still got it's still dragged around by US dollar strength and weakness. So my opinion is we're probably going to pull back a little bit here, likely to see some pretty decent support in the 68 area. We've closed at 68.91. Key level 69.55, 69.55, and 69.01. So we've got some resistance up here also. But for now, I think my bias is slightly tipped to the upside. But again, if you're trading the New Zealand dollar, you want to keep a very, very close eye on those metals, because they will be a determining factor whether New Zealand can strengthen. So if gold continues to break lower, then New Zealand is likely to go down with it. Now, looking at Euro US, we've already pretty much spoke about this. I've pretty much spoke about this already, but I'm just going to touch base on it briefly so everybody can see what's actually taking place here. Now, the predicted true strength indicator from Vantage Point has crossed to the downside. Very interesting indicator, this predicted true strength indicator. Again, from a medium to longer term perspective, because it's having trouble getting a clean signal on this pair. Now, again, I've talked about the corrective move on the US dollar index and things of that nature. Our predicted medium and long-term differences are turning positive. Predicted MACD above the zero line also in positive territory. But the predicted true strength indicator, which is Vantage Point's own indicator, is struggling to confirm a buy position. So what we want to keep an eye out to start the week, again, on a holiday short week, 123.20 is a critical level. It represents a major level of support. Right now, it appears that's a good buying opportunity, as we've had a very strong close at 125.59. But again, much like that U.S. Swiss franc, we've got a fairly wide gap here between the 18-day predicted moving average and where the market's closed. So it's perfectly normal for it to retrace. The main thing is we've got a sell signal on the U.S. dollar index. The euro, again, making up 57.6% of that index. So on a trade-weighted basis, it certainly suggests that after a minor retracement, the euro has further upside potential. So the key areas we're going to be watching: 124.49, 123.59, and 123.20. All critical levels, on the euro, to see if we can get this thing moving forward. Now, again, I expect a very volatile week, much like what we've had this past week. I also want to take the time to remind everybody we have the live pre-market open, which is at 9:15 a.m. on July the 7th Eastern Standard Time. We'll be looking at entering trades into real-time conditions using the FXCM UK platform. Very interesting, so I hope everybody will come out for that. So that is the Forex weekly outlook for the week of, again, July the 5th, 2010. And again, my name is Greg Furman, market analyst here at Trader.